Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today we are diving into a report about Blackstone Secured Lending Fund. So buckle up, it will be a secured ride, or will it? This report is about Blackstone Secured Lending Fund's decision to sell up to $600 million worth of its stock through various sales agents. It outlines the details of these agreements, how the money will be used, and some legal aspects. Sounds boring? Let's see if we can find the interesting bits. If you appreciate getting straight insights from corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below. Come join. So on July 11, 2025, Blackstone Secured Lending Fund, the company, made a deal with a bunch of companies to sell more of its stock. Think of it like this: the company is trying to raise money by selling pieces of itself, called shares, to investors. They have agreements with Truist Securities, RBC Capital Markets, and several others who will act as sales agents to help them do it. All these agreements together is what they're calling the equity distribution agreements. Basically, the company wants to sell up to $600 million worth of its common stock. These sales will happen using something called a prospectus supplement, which is just a fancy way of saying an updated sales brochure. The goal is to get the best price they can for these shares, either by negotiating deals or selling them directly on the stock market. It's like putting your house on the market and hoping for a good offer. These sales agents are not working for free, of course. They will get paid a commission, which can be up to 1% of the money they make from selling the shares. Also, the price per share cannot be lower than its net asset value. And to put in simple English, the sales price cannot be lower than the company value divided by how many shares there are. What's interesting is what the company plans to do with the money from selling these shares. They want to use it for general purposes, which includes investing in things that match their business goals and also paying off debt, which they can later on reborrow. There is a catch here: the company does not have to sell any shares if they do not want to, even though they prepared all this paperwork. There is no obligation. It will depend on how the market is doing, how much the shares are trading for, and if the company thinks they need the money. It is like preparing to launch a rocket, but only launching if all the conditions are perfect. What we have just discussed is only a summary. There are more details in the actual agreement filed as an exhibit. It is important to note that this report is not an offer to sell or buy securities. Basically, this report is just an information update, and it does not mean that you should go out and buy those stocks. Now, here is the interesting part. All the sales agreements from January 2025 between the company and all those sales agents are terminated. It seems like this new set of agreements replaces the old ones. Think of it as cleaning house and starting fresh with updated plans. It doesn't tell us exactly why, but there must have been a good reason for changing the agreement. For those interested, there are also some legal opinions included. Now let's step back and look at the bigger picture. Blackstone Secured Lending Fund is essentially raising money to invest and pay down debt. Selling $600 million worth of stock is a big move, and it shows they are actively managing their finances and looking for opportunities. The fact that they replaced old agreements with new ones hints that their strategy might be shifting. Perhaps the terms of the original agreements were no longer favourable, or the company saw a better way to sell its shares. One of the key things to watch here is how the company uses the money it raises. Will they make smart investments that pay off in the long run, or will they struggle to generate returns? Also, keeping an eye on their debt levels will be crucial. If they keep borrowing more and more, it could become a problem down the road. Overall, this report gives us a snapshot of a company making strategic moves to position itself for the future. Whether those moves will be successful, of course, it depends on many factors, including market conditions, economy, and competition. Alright, that's our breakdown of Blackstone Secured Lending Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.